Hello everyone, Spencer here. This is a pre-week analysis for how I expect this week to go. I will start this video by saying that my convictions are still the exact same. We've been calling for a little bit over a week now for a pullback in the markets. And while surface value, you might be saying that perhaps we were wrong or maybe a little bit too early in calling for it previously. And that's fair to some extent, but look, last week was very much so an aberration from the norms that we've been seeing in the market. And so here we've got, I just wanted to show you this. This is the weekly chart for the S&P 500, so every candlestick is 1 week. And we haven't seen this for months, but the close of last week's candlestick was about 0.1% below the close of the previous week, so 2 weeks ago. And that just has not been happening recently with this incredibly volatile market. We have not gotten a week, at least not one that I can see, that is where the week basically ended right where it started. And so, yes, our convictions are the same, and I know that we've been saying this for quite a bit now, but nothing significant has been done, no technical damage, and no price action damage that have caused our opinions to switch. And so most of the analysis that you're going to see in this video has been stuff that we've already touched on. There's a couple of new stuff that has actually made our convictions stronger for this pullback, but by and large, most of the analysis is pretty much the exact same. And so we'll start off. This is the 1 hour chart for SPY. And now look, I understand this is a very messy chart. I'll clean it up in a second. I just wanted to show you the Fibonacci levels that I'm using. So my point in showing you this chart is that I wanted to show you that we have a very significant zone of about $5, so a percentage point or two, and it's just above where we are now. But it's very, very thick resistance. We've got these yellow lines represent points of prior reversals, and so that those act as our resistance. When support's broken, it becomes resistant, it's broken all the way back here. And then we have a nice fib cluster just a few dollars up, and so overall this zone of a couple of dollars is very, very thick resistance. It would take a lot for the markets near term to push up past those. Now that's not saying that it can't happen, but the probability is very much so in favor that it's not just gonna cut through this like a knife through butter. Switching over to the 4 hour chart for SPY. Not much that I wanted to point out here. Look, the same theme that we had in the past couple of videos that we've mentioned. We broke this rising bearish wedge pattern fairly impulsively, but we've just kind of consolidated after that. Now maybe we're going to backtest this trend line, maybe we're just going to hit the support zone and come down. It's all up in the air. I think it's probably very likely. Nothing's 100%, but look, we have on the 4 hour chart, we have a nice bearish divergence, very strong divergence, by the way, forming where price is going up but the momentum is going down. The last time that we saw divergence on the 4 hour chart that played out, you can see here on SPY, this was a bullish divergence early on this volatile market, but we can see made a lower low in price, but the momentum was going upwards. And then that ended up popping for about an 8% rally, which is pretty significant. Now look, I'm not the biggest proponent of divergences on the 4 hour chart. I don't think they're not as frequent as on the 1 hour chart, and they're not as consistent as the 1 day charts. So take it for what it's worth. It's just another sign for me personally that we have a pending pullback coming. Real quick on the 1 hour chart, we've gone over this stuff a lot already, but the 1 hour chart, just like the 4 hour chart, we've got multiple bearish divergences. All very so much still intact. In fact, if we push up just a little bit more, maybe even like half a percentage point would do it, we would be forming a higher high. Right now we kind of have this double top forming right at the bottom of this resistance zone. For all intents and purposes, this is still a divergence playing out right here. Sure, the price is technically not a higher high, but you don't need it to be technically a higher high. You just need to see that the price is moving opposite of the momentum. The momentum is very clearly waning here. The highs are becoming increasingly lower than they were. You've got 1, 2, 3, 4. Meanwhile, the price continues to go up, if not move slightly sideways. And taking a quick look at QQQ, it's the exact same setup as it was for SPY, nothing new. Broke the wedge pattern impulsively, and we've just been consolidating a little bit. You've got the same bearish divergences on the MACD. There's nothing new here. And just like on SPY, we're coming up to this resistance zone, so that's QQQ. In terms of the technical analysis, this is a pretty strong setup. The only real worry that you have going short here would be something fundamental in the markets, perhaps some Chinese-US trade news, which is somewhat unforeseeable. In that case, they could see that these bearish divergences don't play out. They get foiled, and the momentum keeps pushing up, and we make higher highs. It's certainly a possibility, but in terms of the actual technical setup that we have here, it's a pretty strong setup. I'd give it like an 8 out of 10 or a 7 out of 10. There's a lot of things that you want to see for a near-term pullback that we have right now. And we'll end by looking at the VIX. So I've mentioned it before, but there's this very nice support zone that we have on the indices, the major indices. We had a nice resistance zone that we're approaching. And on the volatility index, VIX, we can see that we have a very nice support zone forming. And actually, let me point this out here, right? So this support zone that we have on VIX started October 3rd. And if you take a quick look at either of the major indices, pardon me, pull up SPY, oops, 1-day chart. Yep, so you can see October 3rd as the very top of the market, and this is exactly when this new support zone was formed on the VIX. And generally when VIX is moving up, the markets are moving down, vice versa for when VIX is moving down. But look, last week we called when VIX was coming down to the support zone and had a nice pop up. The major indices did not react too well to that, though. They kind of just stayed in that consolidation zone with a slight move down. But again, look, we're moving right back down into it. And in fact, I actually just noticed this, but I suspect... Okay, so we had a little bit there, but if we take a look at the 4-hour charts, oh, very nice. So if you keep going down a little bit more, we're going to have very nice bullish divergences in place on the VIX. Generally, those play out pretty decently. Again, it's hard to say. It's the 4-hour chart. It's not my favorite chart to use the divergences on. But that's that. I'll leave it there. Our convictions are still that we're expecting a pullback on the major indices somewhere in the zone of certainly at least 4%. So if you're trading the leveraged short indices, ETFs, pardon me, that would net you a pretty good profit. Nothing's guaranteed, obviously. Nothing's guaranteed in trading. Anything could happen, but the setup is very strong right now for going short, as it has been for the past week now. So that's that. If you liked the video, be sure to like, comment, subscribe to us. We greatly appreciate it. Any support that we can get right now is very helpful. And until next time, make sure you keep your numbers up.